Hi, welcome to the Market Alert for Friday, the 27th of June 2025. So April tariff panicans on suicide watch as S&P closes near record high. The dollar hit 3-year lows as stocks, commodities and bonds surge. QE trade anyone? Yeah, that's what happened during QE, which I have no doubts will return at some point. US stocks were bid on Thursday to see S&P around the record highs, while the NASDAQ pushed above record highs. I keep saying there's no end to this. No end to this at all. Stocks hover around the all-time highs ahead of PC, which is out today, PCE that is. So let's have a look at what we've got today. We've got Spanish CPI. We've got the core PCE index, that's at 1:30, and then revised UN consumer sentiment is out at 3 p.m. So let's have a look at the markets and these, particularly the S&P that's near its all-time high. I think it's actually done this overnight, and we'll kick off with the Dow though, which is also heading back towards its all-time high as well. So a big day up for the Dow yesterday, taking out the resistance that we've noticed over the last few days at 43,194. Next upside target is 43,507. The all-time high, if we just have a look at the monthly charts and then spread this out a bit, we can see price is making its way up very nicely to that 45,077. So 45,077 is the upside target for the Dow. So moving nicely, great effort yesterday. The cash market opened, the volume came in, and the market just went in one direction. And you can see overnight prices are sitting on the close and are going to try and attempt to get through today's high, certainly using the PCE news at 1:30. In the German DAX, the market is sideways to higher, moving up nicely. The momentum's heading in the right direction. It will play catch up and end up making a new all-time high as well at 24,487. We've got a few days yet before we get to the tariff confirmation, which is the 9th of July. So yesterday, the DAX moving higher. It's free to move higher. And again, you can see yesterday the market was up, pulled back during the pre-US Open, and then found support down towards the close, and then off we go, and market moving higher with the Dow dragged along for the ride. But again, it soon found its own independence, which we saw earlier on in the year, that the Dow and the US markets were making new all-time highs, and then the DAX wasn't. This was just after Trump was elected, and then all of a sudden it kicked off and off it went, and that'll be the same once more. These markets aren't going down. There is no crash. There is no imminent crash in these markets. We can, and it's not just arrogance on my part. You just have to look and apply common sense. You can see that we've had war after war, which normally you'd get an abreaction to begin with, and then as the war the ceasefire came in, the markets would move higher. You're not even getting that abreaction anymore. The market just says, okay, another war, right, no problem, that's more money, doesn't matter about people dying, we can make more money, move the markets higher. And that's how it has been now since Russia invaded Ukraine. Had a bit of a wobble to start with, then got used to it, and now the market's used to wars. They got had a bit of a wobble with the tariffs. That was discounted because Trump couldn't make up his mind. We saw COVID. We were all going to die. That never happened. Market went back. Every time there is something, the market makes its way back because the rich and the elite have control of it with algorithms. And also now we've got AI that they can use to assist them in their endeavours to keep the markets pushed up or moving up and increasing their wealth. And that's why it's working this way. It never used to be like this. When I started in the 1990s, it was not like this at all. Even the Chancellor just had to raise rates. I remember Kenneth Clark raising rates and the market fell out of bed, 4th of February 1991. And yet here we see the markets just continue to keep moving to the upside. I have no doubts that one day it will happen, but it's going to take something seriously major, whether that's a nuclear attack or something, to tank these markets, or just the financial system runs out of steam and they can't kick the can anymore. But at the moment, they've got plenty in the tank they can do. They can still go ahead and print. They can print into oblivion until they can print no more. They'll find a way to keep this nonsense and madness going. Right, let's have a look at the S&P. So in the S&P, this platform shows the market having made a new all-time high at 61.47, but the official CME is just off the mark. But again, that'll be no problem today, will it? Moving the markets higher. And again, we were up in the cash market. We traded sideways, bit of red there, but the volume came in. It was already pumped and primed, and off we go. See the market moving higher there. Meanwhile, in the FT 100, that's being dragged down slightly. Political reasons, I think, for that one. But other than that, again, it will play catch up as they always do. Yesterday, you can see in the 30-minute the market moving up and then up again in the overnight to yesterday's high. Market having a bit of a breather there at the moment and needs to get back above that 200 MA important level there for the market. US dollar down again yesterday, but putting in some sort of a test there. You can see prices coming back, and overnight a bit of a green showing there, as well as prices again trying to move back to the upside. Let's have a look at the metals which are coming under pressure. So starting off with silver, this managing to break out yesterday, but there's some supply around, so somebody was selling into this rally. Overnight we've got a bit of weakness, but certainly looking stronger than gold at the moment. If you have a look at the 30-minute chart, we spiked up, but it wasn't long before they slammed it back down, was it? They soon came in and said, oh, hang on a minute, let's get this back down. We can't have this running away to $37 an ounce. And then you can see the market drifting sideways and then lower. As I'm recording, the market's being slammed back, but we've got a bit of demand coming into the market at the moment. Need to take out yesterday's high, which we can see there is currently at 36.82, just below the red line up here, which is the $37 per ounce. Meanwhile, gold is under pressure. You can see we've got red bars all the way for the last few weeks, despite the Middle East escalating. Gold has come under a lot of pressure there, but seasonally, like I say, it rallies towards the end of the summer and also into the end of the year. And there you can see exactly what is going on. So slammed down yesterday with the London fix, and then overnight in Asia the market pulling back. And this is engineered as well, so that the central banks can continue to buy gold at a decent price there. So let's have a quick look at the gold-silver ratio. So as you would expect, silver holding support, gold moving lower, so the gold-silver ratio is also moving lower there. Let's just have a look, see where we are as we break the lows to the left, hopefully break the lows to the left, and then we go down towards the 88 level. So again, keep an eye on this one. Actually, we've got a level here to the left as well. Let me just grab this and put that one in, see where we are. So we're at 88,779. Not that the points really matter. So that's the level we're looking for. As long as this level can be broken here. So it has broken it. Let's just lock that in and spread that out a bit so we can see where we are. So yeah, we've got a break there in the gold silver ratio just below the 90 level, which is a positive for the silver market. But today is Friday, of course, and the Fridays is generally known as Smackdown Friday. So let's see what happens when we get those PCE numbers at 1:30. Right, let's have a quick look at yesterday's trades. So in yesterday's market action, we see again the rally before the market opens. That is the cash market. But fortunately, it continued to spike up to begin with. Big move there. If I just wind this back, I narrowed the chart because I wanted to see where the high was for Wednesday. But if we just bring this back, you'll see how the market gapped. It gapped higher on the opens, moved lower, and then stayed up. So I narrowed the chart to see if we're going to get up towards the high. Not a chance. And then rescaled the chart. Market then moved to the downside. We then had a potential buy signal, which was filled, the market moving up. And then we came back and we tested the averages, which you'll see in a moment. So prices up, and then we come back to the 20 bar moving average, back up to the R1, and then we see some weakness come into the market, or potential weakness there with the sell, which wasn't filled. But then as we went into the mid-morning area, we saw prices starting to become sideways. Then we get the weekly jobless numbers from the US. Market finds support at the 200 MA. You see them buying off this level, the two green bars there with the volume, and then prices coming back and having another look at this, but this time failing, and then waiting again for more news. So as we go into the US again, you can see these clusters of volume where they're buying back in. Short-lived again because of the 20-bar moving average stopping prices from moving higher. And then we find a bit of support. We get the open of the US, which we saw move sharply to the upside. The DAX had other ideas, traded down, as you can see there. Then the volume came in and supported the market with prices reversing. Then the news, and then off we go to the upside once more. We get a pullback, which you can see to the DP with the green bar and staying above the 20-bar moving average. And then prices moving back to the upside there through the 200 MA and then into the early part of the evening there as prices continue to move higher in the electronic market for the DAX with the US markets. So a quick look at where we are overnight, and we can see that prices are sideways at the moment. They're above yesterday's high, which is a good thing. Probably the first time that's happened. We didn't quite do that yesterday. I'm just looking at the daily charts, but if you look at the previous days, obviously we've had lower highs all the way through here, and now it's changed a bit. So we've got the market currently above yesterday's high at the open, so that's a positive there for the German DAX, and also it's got to play catch up as well with the S&P, which will no doubt go on to make its official all-time high later today. Right, that's it for this one and for this week. So have a great weekend, and as ever, thanks for watching. See you in the next one.